The February 6th 401k Maneuver blog is titled 7 IRS Changes to Know Before Filing 2022 Taxes. The IRS has warned taxpayers they should expect smaller refunds due to pandemic relief measures that have been allowed to expire. Don't get caught off guard. Keep listening for 7 important IRS changes you need to know before filing your 2022 taxes. The IRS is telling us to expect smaller tax refunds this year. Stimulus payments during the pandemic started with the CARES Act in 2020, with individuals getting $1,200 per adult and $500 per child under the age of 17. Later in 2020, an additional $600 per adult and child under the age of 17 was given. This continued with the American Rescue Plan in 2021, with $1,400 per adult and child given. If you didn't receive your stimulus during the year given, it was added to your tax refund the following year. This increased tax refunds exponentially during this period. However, stimulus is now a thing of the past. Since there were no stimulus payments in 2022, none will be included with this year's tax refunds. Income brackets have changed, but the rates have stayed the same. For the 2022 tax year, changes were made to the income brackets to adjust for inflation, but the tax rates for those brackets have stayed the same. For 2022, the standard deduction increased $800 to $25,900 for married couples filing jointly. For single taxpayers, it increased $400 to $12,950. For those filing as head of household, the standard deduction increased to $19,400, up $600 from last year. The child tax credit, which is the largest tax break for many families, has been reduced for 2022 taxes. In fact, it's been reduced back to the 2020 level of $2,000 per child under the age of 17, down from $3,600 for children under the age of 6 or $3,000 for children under the age of 18 in 2021. So, a family of 4 with 2 children under the age of 6 could see a $3,200 less credit on their tax return this year. Part of this credit was paid out in installments. However, in 2022, this has changed, so none of it was paid out early. This year, there are changes to the Child Independent Care Credit. This credit, which applies to earners who pay someone to take care of their children or a dependent with disability in their household while they work, is back to pre-pandemic levels for 2022. The American Rescue Plan originally increased the amount of expense eligible for the credit, relaxed the credit reduction due to income levels, and made the credit fully refundable. This is now gone for the 2022 taxes. For 2022, the credit for children independent care expenses is non-refundable, and you may claim the credit on qualifying employment-related expenses of up to $3,000 if you had 1 qualifying person, or $6,000 if you had 2 or more qualifying persons. The maximum credit is 35% of your employment-related expenses. Also for this year, only those earning $15,000 or less can qualify for the maximum credit, which has shrunk to $1,050 for 1 qualifying person and $2,100 for 2 or more qualifying persons. The Earned Income Tax Credit was expanded as a result of the American Rescue Plan of 2021 with the intention of providing lower-income workers without children a bigger tax break. For 2022, this relief has ended. For the 2022 tax year, single filers with no children who earn less than $16,480 can get a maximum credit of $560, down from $1,502 in 2021. During the pandemic, the IRS allowed taxpayers to reduce gross income up to $300 for individuals and $600 for those filing jointly if they donated cash to charities. For 2022 taxes, this allowance is gone. If you want to write off charitable donations, you must itemize your deductions. With that, stay tuned for future information in 401k Maneuver. Have a good day. Bye-bye.